if you want to save thousands, tens of thousands, maybe even hundreds of thousands of dollars, then this is the podcast for you. I have the world-class best CPA on our podcast today, Ric Gonzalez, who's the founder of MXCPA. He's going to help you so much, not only save money, but build wealth as quickly as possible. And I've met tons of CPAs, and he's by far the most creative and also most savvy as well. So you're in for a treat. You want to save tons of capital, make more money, and protect your families. This is the podcast for you, Elite Edge Podcast. Rick, thanks so much for being here. Happy to have you part of the podcast.
Thank you, Jordan. I'm super excited. Thank you for inviting me. Hi, everybody. So, yeah, thank you.
Yeah, cool. So I already introduced you, obviously, a little bit about the best of the best, super creative. What would you add to that about who you are, what you've done so far, kind of your background, how you help people too?
Yep. So, I'm a CPA with more than 23 years of experience. I have had the privilege of working as a chief financial officer for organizations with budgets over $101 million per year. Um, I've worked with, mom and pop operations, right, too. So I've helped people starting business or starting their own nonprofit organization grow. I've helped on both sides of the fence. So as a CPA here in Nevada, you require back then in my days. I'm gonna age myself now. I had to had 2,000 hours of audit work and working under another CPA. So I've done the audit work outside. I've been inside too, helping prepare for that, and I've been the in between too. So lots of experience here, right, from construction companies to nonprofit organizations to manufacturing companies. So if you have a question about a business deal or how to grow, I think I can answer your question.
Without a doubt, that is extraordinary. $101 million a year. What did you learn from doing that kind of high level stuff?
Well, teamwork. That's the word. If you want to build success, you can't do it alone. You have to build a team around you, right? So when you're first starting, right, yep, you need a CPA, you need an attorney, you need a real estate agent, a broker, you need an insurance guy, business insurance, right? So all of those people are going to help you build your wealth. They're going to help you grow and scale your business. You don't have that team behind you, it's going to be harder to do it. A marketer, right? So, yep, you need somebody in marketing too. Yes.
Yeah. I always say to my team, like, there's nothing great in life happen by themselves. You need a team.
Right.
You need a whole people working with you to get that happen. Otherwise, you can go fast, but you won't go far.
Yep. And you can get to a certain point. So I've seen businesses grow, mom and pop operations that start, right? They grow 1 million, 5 million gross a year. But if they don't have the team, they'll probably stop right there. They won't grow much further, right? You have to have a team if you want to scale up over $5 million gross per year.
Without a doubt. And then I'm curious, what made you start your CPA business and get into that kind of line of work?
That's a very good question. Thank you for asking that. So, when I first started my career here in Las Vegas, Nevada, right, as you can tell by my accent, Spanish is my first language. So I noticed that there was a lack of financial professionals that spoke Spanish. So the Spanish market was involved with the Latin Chamber of Commerce, went to their events, uh, went through the community, and yep, there were no Spanish-speaking CPAs. There were some Hispanic CPAs, but they spoke no English, right? So second, third generation, so their Spanish abilities weren't there, right? Their financial abilities were there, not their Spanish-speaking abilities, right? So uh, I, I said, well, maybe I should start the business. Uh, but of course, having been a non-traditional student and with three kids at the time, one that was about to come right after I started the business, uh, I didn't really have the funds. There were no funds. So in one of those weeks, I had the owner of a newspaper, a Hispanic newspaper, approached me. Hey, why don't you start your CPA firm? I said, well, I explained it to him. You know what? Maybe I can give you a loan. And
Wow.
help you start the business. So, well, let me think about it. Then about the same week or so, my friend or neighbor comes, you know, white guy, American guy,
Mhm.
raised here for generations, right? He comes to me and he says, "Hey, so why don't you start your own CPA business?" Explain the same thing to him, and he tells me, "Hey, I can give you a loan, and that way you can
Wow.
start the business." So at the same time, you are pretty much the same time. So the universe was pointing me towards that direction. I spoke with my wife. We, prayed about it, and we said, "Yeah, let's do this." And so that's how we started it, right? Because we saw the need, and so yep, we that's how we started the business.
I love that. That is super serendipitous. That yeah, two people come to you, obviously believing so much off you alone as well. Which is always, the lifeline of businesses is having capital to grow the business quicker, not go too long. So by having a CPA on your side, like Rick, is so important to help you free up capital, save on taxes, invest more into your business, more into your livelihood, and so forth, and also your empire. And as me, my real estate team's done $1.5 billion in transactions over the past few years. And I know running a business is hard. Most people see TV shows, think it's so easy. What were some of the biggest challenges that you had growing your business from scratch to where you are now?
So one of the biggest challenges was at the beginning. Really, I didn't have challenges, right? So I'm sorry, but the
What's
first 5, 7, 6 years of the business, it was great, right? So we started building the team, adding more employees. Had to go from a small office to a bigger office, and then to another bigger office. Uh, the need was there,
Mm,
right? And I don't know how many of you guys are old enough to remember 2008. But those of us that were business owners in 2008, we went through the house bubble, right? So banks used to lend to people that shouldn't probably have received those loans. The epicenter for that crisis was the Las Vegas market and the Florida market.
mm,
The epicenter for the Las Vegas market was the Hispanic market.
wow.
The clients were construction workers, mortgage lenders, and real estate agents and brokers.
Hmm.
So they started going left and right, dropping like flies. So I learned that I shouldn't focus my business in one specific market,
Mm.
that I needed to diversify, right? To not just, yep, there was a need originally and it grew successfully for years.
Mm-hmm.
But when it hit that specific market, it hit hard. And I had to start letting my employees go. So that was a bad situation. So yeah, you don't want to get yourself in that boat. You want to diversify your market, grow it. So now MXCPA offers services not just at the Las Vegas level, not even just the Nevada level. We offer services throughout the states, and we actually have clients from outside the states that come to invest in the United States
Mm.
as clients too, right? So we've diversified when abroad. We're not doing just Spanish because we do still have clients that speak Spanish, but we don't specialize in the Spanish market any longer. Now we do anybody and everybody that's gonna do. We do help a lot of immigrants because we do have that experience, but that's
Mm-hmm.
not our focus, right? We'll help anybody now.
I love that. Yeah, I think a lot of times that businesses can do really well in great times. But the true entrepreneurs, true real business owners who can survive in the hard times and diversify and adapt, those are the true legends like you, those who kind of find a way to get past that and evolve still to the next level.
Yeah, yeah. Thank you. So, do you have any experiences like that where you had to adapt to the difficulties of the different financial crisis?
Oh, without a doubt. For us, in 2021, like any home on the market would sell in a second. Like, I
Mm-hmm,
had a
mm-hmm.
home sell for 150K of asking price within 2 days.
Wow.
We're in 2021, and it didn't matter what you had, it was sell. It was 1,700 homes on the marketplace at that time in Austin, Texas, which is the least amount of homes you've seen in 12 years. Never
Wow.
seen that few homes. Now in 2024, 2025, there's over 15,000 homes on the marketplace. And last year, I think 47% of agents sold less than one home, less than one, or half
Wow.
the agencies. And then 76% of agents sold less than two homes. So that means most agents made as much as the McDonald's employees did, if not less than that, honestly. And it's
I
not a
have
bad
heard
job.
that.
Like,
Yeah.
and for us, this is our best year yet because we understood that we can do more marketing and adapt and find new clients and add more value to get past that hump.
hmm I understand from clients, again, I'm not a mortgage or a broker, I'm not a lender, I'm not a real estate agent, anything like that. But I've seen my clients, and usually are my construction clients too, where I've seen them that usually the high end market, even on harder times, they don't go down, right?
Yeah.
They're ready to buy.
Mm-hmm.
Have you seen that yourself too in the markets where you work?
Yeah, without a doubt. I'd say last year, 52% of all luxury transactions were done in all cash.
Wow.
52%. All cash. Because like for them, they don't care about interest rates. If it's high, if it's low, it means nothing to them. They just buy all cash and do a tax write-off if they want to, or some kind of strategy to get past that, or it means
Mhm.
nothing to them in that regards as well.
Yep.
And on that point, what is your philosophy on your MXCPA business and how you help clients have more success and kind of leverage the best opportunities for them?
Perfect. And that was leading right into what I wanted to talk
Love
about, right?
it.
So yes, that's what I've learned, right? So the high income earners and ultra high income earners, they're never gonna suffer the economic downturns like the rest of us do.
Hmm.
So that's why MXCPA does specialize in that market, right? So
Yeah.
we do help a lot of clients that make at least $250,000 or more. Um, but I don't want to lose where we come from. I don't want to lose the opportunity of helping the next generation, those that are about to become
Hmm.
in 10, 20 years from now, the high income earners, right? So that's why we also help those that just broke the 100K barrier on their W 2, because now they started making money. And if they make the right decisions now,
Hmm.
they'll be ready 5 to 10 years to become those 250K plus earners, right? So, and that's why we like to serve those two markets. So, yeah, we do specialize in the high earners market,
Hmm.
and we want to help the next generation too.
I love that. That's amazing. What has been like your favorite success story so far from your past clients you've had? Obviously, you can't tell too much detail because CPA work and it's confidential, but of the stories you've had so far.
I had a couple of different experiences in that realm. So, one, of course, will be the money impact, the
Mhm.
financial impact, right? The tax saving impact,
Yeah.
the luxury, appealing, sexy type of
Mhm.
stuff, right? That is like everybody's taxed to us, yeah, or and they're thinking of sexy, right? The
Mhm.
other is the social, the emotional, the
Mhm.
caring impact, right? So if it's okay with you guys, I'll share these two stories
I love it.
with you.
Yeah, definitely.
So the first story, right, is this couple worked very hard to build this business. Immigrants too. He's from Guatemala. She's Cuban. They
Mhm.
build this insurance business, health insurance business, right? They're selling health insurance. They grew it very large, and so large that they got noticed by a larger health insurance company, and they approached them
Mm.
to acquire the business. So they come and talk to us, right? Hey, so we're about to sell the business for over $300 million.
Jesus.
Okay, and so they're worried about the tax implications, right? So one of the tax implications, of course, is capital gains.
Hmm.
So even though it's 20% right now for a long-term capital investment, like a business, if you've had the business for over a year, that's still 20%
$50
of that.
million. Dollars.
It would be a few $1 million, right? So you say maybe save 100,000. Well, we're talking actually on this one, a few $1 million,
Wow.
right? So okay, they say, well, and then the other thing to consider when you're selling any assets, if you depreciated them, or even if you didn't depreciate them, but you should have depreciated it, you get to pay what's called a recapture depreciation tax, which is a flat
Mm.
25%. So if you're selling a business, on top of the capital gains, you have to recapture the depreciation, even if you didn't take that depreciation.
Jeez.
Right. So, yep. And you guys that work with real estate, you know about depreciation, right? It's a nice little tool that you have to save on taxes, right? So, if you have, a spouse that doesn't work and you're not into real estate, you can get the spouse to qualify as a real estate agent for tax purposes. And now you can do a cash segregation study and accelerate rapidly instead of waiting 27 and a half years. You can accelerate rapidly, maybe 50 to 80% of the worth of that real estate investment, right? So very appealing. But then when you sell it, if you don't do a like and exchange, right,
Mm-hmm.
the straight sell, then you're going to have to recapture that depreciation and pay a flat 25% on that recapture of depreciation, which, yeah, can be a lot of money, right? When we're talking about over $300 million for a
Yeah.
business on top of the capital gains. So they come and they say, hey, can you give us some solutions? At the time, there were a couple of different situations available, right? So we had, of course, they could do an opportunity zone, right? So they could sell the business and they could have elected to invest the gains into the opportunity zone. That wouldn't get rid of the problem of the recapture of the depreciation, but it
Mm-hmm.
would get rid of the capital gains for it would defer the recognition of the gains for about 5 or 6 years. And that was an option, right? But it wouldn't really get rid of the tax situation. It would defer some of it, and
Mm-hmm.
it would on the recapture depreciation, it wouldn't do a thing on it. The second option we presented to them was to establish a nonprofit organization
Mm.
and first donate their business to the nonprofit organization and then sell the business from the nonprofit organization. By doing this, instead of having to pay the capital gains tax or the recapture depreciation, they actually got a nice tax deduction.
That's amazing.
Even though the amount of the money that they were going to have to do was going to go over the limits for charitable contributions for that year,
Mm-hmm.
they would be able to use the remainder for another 5 years of what they were not able to deduct that year.
That's incredible.
Right. So now, so we actually did help them save, over $60 million just on the capital gains and a few other millions on the recapture of depreciation. So that's like the biggest financial impact that we had on one of our clients with their nonprofit organization. They're doing fabulous work. So, like I mentioned, he's from Guatemala. She's
Mm-hmm.
Cuban, but she loves the Guatemalan people, obviously.
Mm-hmm.
Nonprofit organization has done so much good work in Guatemala. It's just incredible, right? So that's on that side, on the money side, on the sexy side, on the appealing side, on the let's wave those
Right.
benefits people and let's show them how much money they could potentially save. Right, on the sexy side, on the emotional side now, right? So was working with this lady. Her kids were small, young, under 18. She's making the family as a whole making $60,000, not more than $60,000 a year. Right, so they're barely surviving, but they
Mm-hmm.
had goals for their kids. They wanted their kids to be involved in extracurricular activities. So uh, I helped them start a nonprofit organization because their kid was working on a volleyball team. So that nonprofit was specific to that school, that elementary school, for the volleyball team for that. So with that, they could actually go and get money for the uniforms from
Mm-hmm.
businesses and governmental entities. They could get the coaching. They could pay for the transport for the competitions, do all this nice, beautiful work for them. So help the kids to develop, right? So it's a nice way to help back to the community and be able to help your kids work and grow and realize the value that there is.
That's amazing. That is a huge. Both of them are amazing stories. One helping the family who really needs the help to kind of find ways to take care of their kids and help the community and do the sports they want to do, and saving $60 million on a transaction is also insane. So this is why having a right CPA on your side is so important. A lot of people won't even know that's even a possibility. So on that point, Rick, I have a question for you too from the
Mhm.
audience. But before I ask that question, what do you think makes you different than other CPAs for your solutions and how you approach things with people?
Well, as you mentioned too, right? I also met hundreds, if not thousands, of CPAs. Maybe not hundreds, but a few tax attorneys too.
Mm-hmm.
Right? And talking to a CPA that thinks outside of the box is crucial, and unfortunately not very a common event, right? So we
Yeah.
have different things that we need to do to get out and think outside of the box, right? So most of us are not willing to think that way.
Mm-hmm.
But what you can do as a customer or a prospective customer, recipient of CPA services of tax professionals, is ask a couple of questions, right? Is there, and instead of asking them in the, hey, can I deduct this, is how can I deduct this,
Mm-hmm.
right? So if you just say, can I deduct this, the easy answer will probably be no,
Yeah.
right? But if you ask, how can I deduct it, you're going to force your tax professional, if they don't know the answer of how they can deduct it, to maybe research it and tell you. If they're like me and I don't know the answer, I will tell you, what, I don't know the answer, but let me research it for you,
Mm-hmm.
right? And then we can research it and come back to you, or think of something creative with the laws and say, hey, maybe this is the way we can deduct it,
I love
right?
that.
Should we take care of that
So the
question
question
about
we
the S
have
corp?
is from Jamie. Said, can you speak to the pros and cons of an S corp, particularly if you're not taking the salary and have no shareholders or partners?
Cool. So thank you, Jamie, for the question. And the pros of an S corporation are tax deductible. There's more tax deductions compared to being taxed as a sole proprietor,
Mm-hmm.
right? So if you have a sole proprietorship, on top of the income tax, you're going to have to pay the self-employment tax on the net income of the business, right? As a corporation, you can take a few more deductions that you couldn't as a sole proprietor. Right? The
Mm-hmm.
home office deduction expands, is not as limited as with the sole proprietorship. Um, if you're a married couple, right, and your spouse doesn't own the S corporation, the health reimbursements can be done to your spouse as an employee of the S corporation. You could not do that as a sole proprietorship,
Wow.
right? So yeah, there's a few uh, advantages to being taxed as an S corporation, right? And I know that Jamie just said an S corporation, but remember, LLCs, limited liability companies, on top of giving you a better asset protection than a corporation, also give you the flexibility of being taxed as a few things,
Mm-hmm.
among them as an S corporation. So yeah, an LLC could be taxed as an S corporation and receive all the tax benefits of the S corporation as well. The can, of course, would be the extra. Uh, and again, Jamie, so on the health insurance thing, is not the health insurance premiums. So the premiums could be taken either as an S corp or as a sole proprietor, as a self-employed individual. You can take the premium as a credit, but the health insurance reimbursements is what the S corp is able to do. So on top of the uh, premiums, you can have reimbursements, right? So co-pays, deductibles, mileage, lab fees, anything that you have to get out of pocket, there you are. Now, so the disadvantage, of course, would be the extra money you have to pay, right? So as a sole proprietorship, I don't have to have an entity, period, right? So if I don't have to pay an entity, there's less money I have to fetch out at the beginning to begin my
Mm-hmm.
business. And then annually, I don't have to pay the extra fees to keep the S corporation going or functioning legally, right?
Mm.
There's, of course, either with an LLC or a true corporation that elects to be taxed as an S corporation, there's legal ramifications. You have to have certain documents to keep the legal protection. You have to be able to separate, and this is actually true for sole proprietorships. You should separate your accounting, your bookkeeping.
Mm-hmm.
Never mix personal expenses with business expenses. So even though it's not a requirement with the sole proprietorship, and it is with a corporation or an LLC, uh, you should still do it as a sole proprietor. But anyway, so yeah, there's more legal requirements. Corporations are supposed to meet at least once per year, right? They
Mhm.
have a formal corporate meeting. Uh, sole proprietorships don't.
Yeah.
Should they still? Yeah, they should still have meetings, right? So if you as the business, what we're talking about the beginning, other than having that team, you also should meet internally with your people. And if your people is just you should still meet with yourself and yourself what you want to do. Analyze the circumstances, do a SWOT analysis, right? Strengths, weakness, opportunities, threats, measure where you want to go, have goals, written goals, sustainable goals, measurable goals, right? And be able to do this so that your business can advance. Uh, so yeah, maybe they're not requirements for sole proprietorship as they are with an S corp. So those are the disadvantages, but I don't really see them as disadvantages other than the money that you have to fish out.
Hmm.
Because I would recommend for you to do those things anyway
Yeah.
as a sole proprietorship.
Well, that is super helpful. And on that point, what do you think are the biggest financial mistakes you see amongst clients or just people in general, and how can they avoid those?
So I think one of the most important things they overlook is looking at the silent partner.
Mm.
You guys know who the silent partner is?
Let's see if anyone knows the silent partners down below. Down below, what are your guesses? Who are the silent partners you think Rick is talking about? Wrong one.
Okay. So the silent partner are the governmental agencies,
Mm.
right? They're your silent partner because they're gonna always be reaching out for you and asking you for money, right? If you have employees, they're gonna have to fish out for the workers' comp. You're gonna have to fish out for uh, taxes,
Mm-hmm.
payroll, training, insurance. So all of these things, right? If even if you don't have employees, you're still gonna be fishing out to the government, the income tax, at least the income tax for the federal government. In most states, for the state too. In some states, you have to fish out even for the county, even for the school. You're gonna have to be fishing out money for that, right? So they're all your silent partner. They're there with you, whether you want them or not. They're not gonna be speaking about how you run the business, but they're always going to be wanting the money at the end of the period, whether it be the year, the quarter, the semester. They want to be there. Sometimes this burden can be as high as 50% of
Jesus.
your income, right? So in California alone, for instance, if you have your business in California, if you are the highest tax bracket, 37% federal, and then highest tax bracket California, 12.3%, you're looking at almost 50% just in income tax. And then you add the sales taxes of almost 10%. And then you add these other little taxes.
Mm-hmm.
Over half of your money is going to your silent partner,
That's crazy.
right? So that's why it's so important to consider that silent partner when you're making business decisions. It should not be your first reason as to why you're doing the business or how you're doing the business, but it should always be your number two consideration when you're taking a business decision, right? Because it can
Mhm.
make a difference between making you money or making a lot less money.
That's awesome. Yeah. I think this is so key for those watching right now and how important it is to ask the right questions. So, like, a lot of times you ask that kind of questions, they say, oh, save for taxes, don't commute with funds, and so forth. This is like a higher level, like, understand how the systems work, understand the silent partners and so forth, and ways to safeguard your money. Because losing half of your income from your hard work is never fun to do.
Right?
And what do you think are some practical steps someone watching this right now can do today or this month to increase their financial health?
Well, number one would be spend less than what you make.
That is the best one.
Okay. So if you want to build wealth, you're gonna have to be willing to spend less than what you make.
Hmm.
Number two, I would say buy assets.
Yeah.
Don't buy liabilities.
Buy some real estate.
So real estate is a very good business, right? Right. So one of my sayings, one of my proverbs, is the best time to buy real estate was 20 years ago.
Mm-hmm.
Because no matter what happens in 20 years, your investment is going to grow
Yeah.
a lot. And people that look at you, even if when you purchase it, you thought you didn't make a good decision. If you keep that real estate property in 20 years, they're going to all think you were a genius. How did you make such a good decision buying that property 20 years ago?
Totally.
Right. So it's always working like that, right? But the best next time to buy assets, including real estate, is now.
Amen.
Right? So the first time was 20 years ago. Second best time is now. Okay. Now, real estate also can be a liability. And I'm sorry, I know I'm talking to the choir and preaching to real estate agents, but real estate can also be a liability. So if I'm buying a house that I can barely afford, right, and I'm doing over 30% of my income to buy a house where I'm going to live, right? So an asset is something that produces income. If I live in that house, it's not producing income. It's producing liabilities. Now I have a mortgage. Now I have insurance. Now I have property taxes, repairs and maintenance, all these expenses. So if I can really afford that, I should not be getting into that house.
Yep.
Right. So my other saying with real estate investment is buy where you can afford, rent where you can live. So you want to live in that nice neighborhood because of the school for the kids or because you like that part of the area, fine. But you can afford it, renting it.
Yep.
And then buy a rental property and where you can afford it, and the rental property is going to help you pay for that rent.
Exactly.
Going to be producing income to you.
Spot
Right?
on. Yeah, I cannot agree with that more, Rick. I know for us, we teach appreciation arbitrage, which is like buy real estate, long-term mindset, hold that for 10, 20, 30 years or longer, and you're guaranteed you will not fail if you hold it long enough. It's going to double in 8 to 12 years. Every 8 to 12 years, your home to double in value. Rick said, you're a genius. What happened? Because like that is how real estate works. And then two, unpopular opinion as a real estate agent who done $1.5 billion in transactions, I agree that you should lease places that are super nice, especially if high income, because you can spend the same 20% down on a mineral house, $200K on your business and other assets instead to make you more money. And more than not, buying your forever home, if you're a high income earner, is costing you more. You can't invest that back in your business, make more money.
Yep. And since we're on that topic of buying and using your personal home, right? So some people like to flip, and I know flipping is not a very good idea sometimes because you can end up hurting yourself, overspending. But if you're gonna live in that house, that's the perfect time to do the flips, right? So you can actually get a tax break on the gain of that flip if you live in the house for 2 out of the last 5 years, right? So if you're living in that house for 2 years and then you sell it, you fix it, make it a nice capital gain on it, and the capital gain, if you're married, filing together, right, is 500K or less, then you pay no taxes on the flip, right? Because you lived on it. So and I've seen people do that, right? Smart people do that. They take advantage of it. They don't actually marry a house. They don't make it their forever home. Right? Or you build. If you're starting up, you're building, right? Buy that first house first, even if it's not what you wanted.
Yep.
Even if it's not gonna be your forever one, you first buy that one that you can afford, and then 2-3 years you sell it, keep the capital gains, do this 2 or 3 times until you get to that house that you want.
Yep, exactly. And another thing as well, for those who don't know this, you can also apply for an FHA loan, which is 3.5% down payment, up to a 4-unit house. So a quadplex still counts as a single family. So you can do the same strategy, live in one side, lease out the other 3 properties, do what he said, flip it, have no capital gains, and you pretty much lived for free the whole time, or made
Correct.
money, ideally.
Correct. Yep. That is a perfect way to do it too, right? I love the way that you explain it. And then, of course, there's also USDA loans,
Mm-hmm.
also with 0% down.
Yeah.
If you're building a farm, so if you don't mind going outside the city,
Mm-hmm.
getting a lot of land, right, and then be able to get that house for almost 0% or 0 to 3.5%. You buy doing a farm,
Yeah.
same thing. You raise chickens, you do candles and sell them. All of
Mm-hmm.
those qualify for farming activities. As long as you do one of those activities, you can qualify for this free money to get that if you don't mind going a little bit outside of the city limits.
Yep. If you hate traffic like I do, it's even better. The traffic is not fun. So outside the city limits, there's no traffic and tons of tax benefits.
Correct. Yeah, that's true because farmers actually. So for sole proprietorships, right? One of the disadvantage I didn't speak about the S corp against the sole proprietorship, right? Is that the IRS expects for you to make money 3 out of every 5 years,
Hmm.
right? So if you have, uh, and that's why sole proprietorships are usually more prone to being audited, because if you're
Mm.
not showing that net income, they want to make sure that you're not a hobby rather than a business. So that's why it's called the hobby rule, right?
Okay.
So if you have the business losing money more than every 2 out of 5 years, they're going to think you're a hobby, not a business. So they would disallow a lot of expenses or all of expenses unless you're actually making income if it's a hobby, classified as a hobby,
Mm.
right? So for farmers, that rule doesn't exist,
That's crazy.
right? So even if you're losing money every year as a farmer, you're not going to be audited. You will be, prone to be classified as a hobby because farming, they're expected to lose money, unfortunately, every year, and
That's
it's okay with the IRS.
it pays the right people, guys. That's why you gotta ask the right questions. But I did not know that. It's insane that farmers can lose money every single year, and you have big tax cuts while doing so. And then right now, speaking of like seasons and stuff like that, this is tax seasons coming up and so forth. What do people need to do to have less stress and more confidence moving forward during tax season and preparing for all that?
So again, it depends on your level, right? So if you're starting up, it's going to be a whole lot less money. You need a W-2, yeah, 1099s maybe for interest, 1098 maybe you have a student loan, 1099s also for the health requirements, right? You get those documents. Most of us now do tax returns online, right? So you're making under 100K, probably easier to just go to these one online setups. The IRS actually offers tax preparation software for free too if you're making under $100,000 a year, right? So there's a lot of free assistance for you. You don't even have to pay a preparer. But yeah, uh, even professional preparers offer the tax preparation for free if you're making under that money. Once
Hmm.
you hit that 100K, now you're starting to make a little more money, and it doesn't feel that way,
Yeah.
especially like if you're in California, because half of your money is going,
Mm.
to the government on different types of taxes, right? So,
Mm-hmm.
so that's why you need to have somebody on your side, like myself or another tax professional that knows the rules and knows how to help you reduce those taxes. But then if you have a business, the requirements change tremendously, right? Again, you need to keep the business and personal separate, have a
Mm-hmm.
bank account for the business, even if it's a personal account as a sole proprietorship, but that is dedicated 100% to the business. The same with the credit cards.
Yeah.
Don't mix, right? So even if it's a personal credit card as a sole proprietor, right, you should have that just for use of the business,
Mm-hmm.
not mix it with personal, so that it makes your accounting a lot easier. It makes it so that if you get audited, you pass with flying colors, right? Because you're not intermingling business with personal,
Yeah.
right? Which is a big no-no. Governmental entity comes and audits you. And actually, I've dealt with IRS, right, with clients where they owe that money to the IRS, and we do offering compromises, and they are paying a tenth of what they originally owed, or sometimes they don't actually pay any money, right? So but that's with the federal government. States usually don't forgive you a cent, right?
Mhm.
So you're talking to a state income tax, state sales tax. They're not going to forgive you a dime, right? You're going to have to pay it all. They're not as flexible as the IRS. They don't have the big funds like the federal government does. So that's
Mhm.
why they have to be more restrictive on what they can forgive or not, and they usually don't forgive a thing. So yeah, it's very important to keep those records straight, separated, and then of course, right, as a business owner, as a manager, if you want to make that business grow, yeah, you can use Excel, you can put it on a Word, you can put it on a pad, but
Mhm.
that's probably not going to give you the reports that you're going to need to make the right decisions to keep your business growing.
Yeah.
So, I mean, come on, guys, QuickBooks, $100, you can get it. I mean, it's not a huge
Mhm.
amount of money. You have a business, get yourself QuickBooks, get yourself any other online software uh, or desktop edition, right? I like desktop edition myself just because I don't have to keep paying a monthly fee. Right?
Mhm.
Online edition usually, yeah, it's more flexible because you can input it anywhere in the world,
Mhm.
but you're gonna have to be paying that monthly fee forever,
Yeah.
right? With a desktop edition, you pay that $100 every 3 to 5 years, right? So because you have to renew or get the newest edition for the bank downloads to keep working. But other than that, it's like you could almost keep that desktop edition forever. And
Mhm.
that's just $100 that you invest so that you can make better decisions for your business. Yes, the profit and loss is important, but for small and medium sized businesses, cash is king.
Yeah. Yep. I agree with that 100%. Like most businesses die due to starvation. It's not having enough capital to keep on going, which is why 87% of businesses fail every 5 years. Every 5 years, a business is gone because they're not understanding the QuickBooks and no funds and the business and the personal and so forth. I had a call yesterday with somebody, and she was like, "Yeah, I want to make 50K a month in income." I'm like, oh, great. Like, is that personal? Is that revenue? Is that your business? Like, oh, like that's a great question. Like people don't think that way because no one taught us. This is why having the kind of podcast is so powerful for people. And on this topic of California charging 50% on taxes and remaining agnostic to politics in terms of Democrats versus Republicans and so forth, what do you think is going to happen with Donald Trump now as president, and how will that affect tax things?
Yeah. So I don't want to get too much into
Yeah.
politics, but anyway, I didn't vote for the guy any of the times that he's run. Uh, but I have to say, on his first administration, my business grew exponentially.
Hmm.
So and I didn't vote for him this time, in spite of knowing that that would happen again. So I do expect my business to grow exponentially again with Donald Trump, and not just my business. I do expect a bunch of businesses to grow exponentially,
Mm-hmm.
right? Because usually his tax codes do help those on businesses,
Yep.
right? So, and usually the Democratic Party hurts businesses because they help most people. Most people are actually employees, so they're more pro-union, more pro-employee. The Republicans are usually more pro-business, right? So I do expect the businesses to do better, especially those that are prepared, right? Those that have the right strategic framework, that are the I can speak now, adaptability.
Uh-huh.
And so as long as you can adapt, see the changes, see what's going on, um, I do expect, just like last time, right? So with the first administration, there was a lot of fear for nonprofit organizations because they wanted to cut the charitable deductions out of the on the 1040 on your personal tax return. You were not going to be able to deduct the charitable donations. It
Wow.
ended up happening was just the opposite, right? The opposite was that now the charitable deductions went from 50% deduction of cash donations to 60%. Before, there used to be a limit. So, like if you were making over $150,000 a year, you were not going to be able to take those charitable deductions at its fullest. Or if you went after a certain threshold, you were not going to be able to take them at all. That went away.
Hmm.
right? So it actually worked better now for charitable deductions. So right now, we're seeing strange and dangerous moves from the administration on the first week where they say we're going to cut all grants, and that's one of the uh, food sources of finance sources of nonprofit organizations,
Mm-hmm.
where they get a lot of the funding from the federal government, right? So that can sound scary. I know they already withdraw, right? They said, oh, no, 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 never mind, we're not going to cut the grants.
Yeah.
Uh, but I think it's going to be turned out to be the same, right? Where even for nonprofit organizations, where these moves can be dangerous and scary, I think at the end of the period, as usual, right, the Republican Party has been with the philosophy traditionally that the government should be small.
Mm.
And then the people should come and do the work that the government or some people think the government should do. So
Mm-hmm.
that's where nonprofits enter, right? So nonprofits provide services that usually governments would. So if you don't want the government to do it, then you have to help nonprofit organizations to be able to do that work that the government is not willing, or that Republicans think that they're not willing. So I think overall, for both for-profit entities and nonprofit entities, it's still going to be good for with Donald Trump,
Mm-hmm.
uh, just because of what happened last time. So I'm thinking it's going to be a repeat, right? It's we as business owners, we were prepared. We're going to grow, and nonprofit organizations are going to grow. Yes, we're going to have to adapt, just like last time.
Yep.
Right? And that would have happened even if it was a new Democratic president. We are going to have to adapt anyway,
Yep.
right? Because the changes would have been a little bit different, maybe, right? So yeah, maybe we have to worry more about our employee force, know what to do and how to deal with those changes in laws and regulations and restrictions.
Mm-hmm.
But yeah, luckily, I think it's going to be good for business.
Yeah, I agree. Someone who is a billionaire and loves real estate, of course, all his laws and tax changes to help him as well. And also, people who are in business, is most of the people on this podcast are entrepreneurs themselves. It makes total sense why as a part of the whole process too. Another question from Instagram said, "What are the best strategies for a baby, like hiring them or using them in marketing?"
Uh, that's a great question. So, uh, if you have children under 18 and you have a business, they should definitely work for you as part of the business,
Mm-hmm.
right? So, if they are at the age that they can understand that they're working, one, and that they're receiving compensation for the work they're doing, two, then yes, definitely you should pay them as W-2 employees. Okay. However, right, if they're under that age where they cannot understand that, then yes, you can use your baby for marketing purposes, right? So yeah, videos, pictures, etc., etc. I would recommend using the SAG rates to make those payments according to the services they're providing. But if they are over the age or they're on the age where they can understand that they're working and that they're being paid for the work, then
Mm-hmm.
having them on a W-2 for about $15,000 this year, and there's going to be free income tax on that and free payroll taxes if you do it the right way.
Hmm.
I would not do them. I would not do them through a corporation. You have to do them either through a sole proprietorship or a partnership where both partners are the parents of that kid or
Hmm.
those kids. Now, on top of that, because now they have earned income, whether they're baby or they're older, because they have earned income now, you can put up to $5,000 on a Roth IRA for each of those kids,
That's amazing.
right? Roth IRAs grow tax free.
Yeah.
When you take the money out for retirement purposes, it's tax free. You start them when
Yeah.
they're a baby. By the time they're 50, they're probably going to be millionaires. Okay. Another thing, after 5 years, they can take out the money they contributed to the Roth IRA without taxes and without penalties. So you can use those monies to pay for their college funds too.
Mm.
right? So you start when they're babies, $5,000 a year. By the time they're 18, it's gonna be a good chunk of money they're gonna be able to use for college funds.
I love that. That is incredible. That is, I have a new baby, as those who are on this call know. So I'm definitely using that for myself now for my son Alexander, because saving money is great. And also, making him a millionaire just because I'm already making money anyways, even better. And I have another question for those on here. Again, most of the people investing in real estate or agents themselves and so forth. Is there a way to defer taxes indefinitely in real estate investing? If I buy a house and I put it into a will, I put it into a corporation, and I pass away, do those taxes go to my future kids or my future businesses and so forth? Is there a way to get past that, or no? Like the buy, borrow, and die strategy people talk about online.
Yep. So we touched a little bit earlier on this, right? So yeah, if you have real estate, the way to defer the taxes indefinitely until you die would be to get a, get a home, uh, then do a like kind exchange, replace it, do another like kind exchange, and then wait until you die.
Mm-hmm.
That way, there will be no capital gains taxes. There will be no depreciation recapture, nothing like that. Your kids now they get a step up on basis, right? So if you die with a will, at the time of your death, whatever the value of the property is, that'll be the new basis for them instead of your basis, of your personal basis. So
Mm.
that's why I would say no. At no time should you, while you're alive, give your properties to your kids or your grandkids. Wait until you die. The best way to do it, right?
Mm.
That's one way to do it. It's not the only way to do it, but that's one way to do it, right?
Mm.
Another way of doing it would be to start a nonprofit where you're gonna be able to uh, like either buy real estate properties straight through the nonprofit or donate your properties there, and then make your kids successors to the board of directors of that nonprofit. So that way, even if they sell, they don't have to worry about like kind exchanges. And I don't know about you, Jordan.
Mm-hmm.
I've seen some like kind exchange deals that fall through.
Yeah.
Right? There's time restrictions on where you have to make the decisions and make the
Mhm.
purchases. So sometimes those fall through.
Yep.
Now you thought you were not going to pay those capital gains, and you thought you were not going to pay the
Mhm.
recapture depreciation, and you end up having to pay all of that all of a sudden, and you probably already spend the money somewhere else because you thought you didn't have to pay the taxes.
Mm-hmm.
That's why you have to do that, right? Yeah, that's why you have to uh, do that nonprofit organization where you can buy those assets, and that way, like an exchange, no, you don't have to worry about because what's the capital gains tax on a nonprofit organization?
Mm-hmm.
Zero.
Yeah.
What's the recapture depreciation? Zero.
Mm-hmm.
There you are. Right? And if you don't mind, Jordan, I hope I've answered your question.
Yeah, definitely.
But somebody was talking about 529 plans. So I
Mm-hmm.
do like 529 plans, right? So they can actually convert to a retirement plan for yourself too. However, they can be very restrictive, right? So 529 plans are usually tied to the state where you're getting the 529 plan for. I know there are some that don't have those restrictions, but most of them do. So you have to be very careful, right? So when you're selecting the 529 plan, that you make sure that it's not with those restrictions, right?
Mm.
And then the 520, when you make contributions to a 529 plan, they're not tax deductible. You're going to have to pay funds of the money that you used to be able to pay that 529. With the strategy that I was mentioning earlier for the kids, right? You're actually making that a deductible for your business. Paying them now is a tax deductible expense for your business. That $15,000 you're paying them if they're on a W-2 as regular employees, or if they're babies, right? W-2, smaller W-2 for the marketing services, right, that they're providing to you is a deductible to your business. And now you're going to fund their education expense with the funds that help you reduce your tax liability. So that's
Mm.
why I like this strategy a little bit better than the 529. But if that's not enough, so they're going to be going to a very expensive college, right? Maybe I work it through the nonprofit organization, right? As officer of the nonprofit organization, one of the benefits that I have is that I can do what's called a split dollar arrangement. So a split dollar arrangement, the nonprofit lends me money so that I can buy my individual or personal whole life insurance or index universal life insurance. We overfund that, right? And then with the funds that are there, I can get loans, which don't count as income, so it's never taxable, right? So we can use those funds for further our investments in real estate or in other businesses, or we can actually use it for college or other expenses that we elect to. So I'm using money that I help reduce my tax liability first by donating to the nonprofit organization, and then from there I get the funds to pay for those college expenses. So again, as much as 529s can be fantastic, the reason I don't like them and I don't recommend them is because you're using money after you pay taxes on it to fund the 529.
That's amazing. Taylor, great question. Great talking points, Rick. That is super extraordinary. You can do in taxes, and it's crazy. Like the way the systems were made is for people who make lots of money or try to make lots of money. That's why it sounds almost illegal to be to pay off all these taxes, do all these things, but it's all legal. It's in the books. And having the right CPAs, attorneys, agents, bankers on your side makes all the difference, helping you get that wealth quicker. Right? Having a power team from day one help you get there. And speaking of
And
from
I
day
think
one,
I think more than just having that team, right? You just have to make sure, right? So yeah, you probably heard of 529s and how fantastic they are and how they can turn
Mhm.
into a retirement vehicle if they end up not using those funds, which is good, right? I'm not saying it's not good,
Yeah.
but is there a better solution to that? Yeah,
Mhm.
why? Because you spoke to a CPA that has the experience to look beyond what looks to be good into something that can be better or best for you, depending
Yeah.
on your situation, right? So that's why it's not just making sure that you have those people on the team, but making sure that that team has the possibility of giving you the best solutions for your businesses, for your investments, for your personal growth, in financial growth.
Mm-hmm. That I think is something y'all needs to talk to Rick. Send a message right now if you can, while you're still watching this podcast, and ask more about that whole scenario and see if we can help you save more money on taxes. Again, you
Yep.
can save thousands, tens of thousands, hundreds of thousands of dollars a year, if not more, depending on how you structure it. Or his number one case study, $60 million saved with his help. So you guys are in the right spot for that. And speaking of like spots, where do you see yourself and your business going for MXCPA in the coming years? What are your new projects you're working on right now?
So we're working on some new things. Of course, artificial intelligence (AI) is going to be a part of everybody's business. It's already part of MXCPA, right? So we do use MXCPAs does use artificial intelligence for some of our services that we provide. Uh, we're helping it to help us get the word out too, right? So marketing solutions. Uh, there's new products that we're offering too. They're going to be offering. So for real estate investors, right? We talked about cost segregation. So if you are a real estate investor, if you're real estate agent, if you're an architect, an engineer, a construction owner company, you qualify for those cost segregation studies to be able to enable you to depreciate the real estate investment faster rather than later, or
Mm-hmm.
sooner rather than later, right? So we're working into that. We're working into expanding into other services for investors, right, as needed. Uh, we see ourselves growing in the next 5 years, about 100%. In the next 10 years, we're growing another 100%. Um, so total 200% growth in the next 10 years. Uh, the I think one of the key things too, right, that we're trying to do again, like I mentioned, is helping those that are starting up. So you have we usually help those over 200. Our clients are usually those over 250K,
Mm-hmm.
but we think we should also help those under 200K, but they've gone over that 100K barrier. So now you're starting paying more taxes. We have a special package for them now, right? So different services that we offer, right? It'll probably be a little less than $20,000. With this package, will be $5,000. Right, so it's a value of almost $20,000, and we're offering it for $5,000. And we're offering that we're going to create a nonprofit for you. We're going to do the books, the tax returns for the nonprofit, and we're going to do the tax preparation for you too. Right, all of that for the $5,000 flat fee uh, for the first year. And if you're making under 200K, but you've gone over that 100K, I think this is a perfect solution for you. And for those listening today, if you talk, call us, contact us. You want that package because you're under 200K, but you're right about that 100K, so you want that 100K starter package, right? If you mention that you listen to this podcast, we'll give you an additional 10% discount, right? So instead of paying the $10,000, it'll be now $4,500. So save yourself some more money by, it's a way of thanking you for spending your Friday morning that you should probably be busy building some money, and you thought, I'm losing money on this. No, now you're making a little bit of money by having, listened to us on this podcast and taking advantage of this special for you.
And that's why you're the best, Vic. Thank you so much for giving the offer to my audience on here. Also, guys, don't think about the $4,500 as a cost. It's as an investment. And think about how much it can save you. If you spend $4.5 thousand to save $5,000, $10,000 or more, how will that help you grow your wealth and your business? And again, I've met tons of CPAs, and Rick is by far the best. And I'm going to save a lot of money this year with his help. And this is why I have him on the podcast for you guys as well, to get his best insights, help you guys really grow as quickly as possible. Make sure you send him a message ASAP before he's too booked up.
Yep. Going to your point, right? So if you're in California, you're making 100K, you're paying close to $50,000 on income tax, just on income tax alone. With this strategy that I'm mentioning to you, now you're gonna pay about $5,000. Right, so you're going to be saving about $45,000. Yeah, of course, you're going to have to pay me $5,000, but hey, you're still making out with 40K.
Yep.
Right. Exactly. So is that a good investment? I think it is. So and that's what we're trying to do. Yeah, I want a little bit of the money too. Of course, we want to live and we want to have kids. Our kids have the nice things, and my grandkids to have the nice things too. But I also want to make sure that I'm providing for you a good business solution that makes business sense to you.
Yeah, all about partnerships. Again, I was talking to my executive assistant this morning how like your CPA, your employees, your X, Y, and Z should make you a 3 to 10x return. And right there, you spend $5K to save $45,000. That's about a 10x return right there from that one little thing. Like Taylor said just now, that is a no-brainer. So make sure you call Rick as soon as possible. And before we hop off the call today, where can people find you at outside of this podcast and so forth?
Yeah, so MXCPA.com is our web page. We have links there for our social media links, right? LinkedIn, Instagram, Facebook. So we do have links there. We do have occasional videos on tax tips, business tips, right? So yeah, please do look us up on those places. I do help, just like Jordan has invited me today. I have been invited to other podcasts. One of the podcasts that I was invited to, and I've been there a couple of times too, it's international, right? So it was Colombia, Central America, Mexico, and the United States. We've held another one, which was Peruvian and the USA, right? So and we'll post all of these events on our social media, of course, right? So anytime you're interested in joining us with this podcast, please join us. I do like to share the financial education. I think that the more information we have, the better decisions we'll make as a country, as a people in the United States, whether you're a new immigrant or a little more seasoned immigrant like us, or you were born here from 3 or 4 generations past, or you've been here for a long time than that from your ancestors, right? If you're a Native American, then of course, all of us, we need to make better decisions so that our country can keep being the number one financial power in the world.
Amen to that. And 2 more questions before we hop off. One, what is one unpopular opinion you have about finances and money that you want to share right now?
One unpopular opinion.
Yeah, unpopular opinion.
That's a good question. Some people see money as sinful, as dirty, right? Oh, I don't
Mm,
want to make money because that makes me like a sinner or something, right? So I would tell you that money is a terrible master, but a great servant.
yes.
So if you're just going after the money like it's your God, like all you care about is money, and you step on people and you do really bad decisions, not just business decisions, but personal, social, moral decisions based on your thirst for money, then yeah, I agree with you. You shouldn't go after money.
Mm-hmm.
But if you're using money for the right reasons, you want to provide for your family, you want to make sure that everybody around you has the same opportunities to provide for their family, then money is a great servant. Money will help you get there, right? So it depends on how you look at money, at the finance world.
I agree with that 100%. And also, probably my unpopular opinion as well. I think that money can buy you happiness and can buy you freedom and buy you solutions because all money is a tool. Not a good master, but it's a good servant, like Rick was saying this now. So definitely change that money mindset. And last question, if you can sell one piece of advice to the entire world, what would that be?
Uh, my message to the world is to be happy,
Mm, love that.
right? And I know you just mentioned that, and I'm not saying it because you're saying it, right?
Mm-hmm.
So for those of you listening, so Jordan gave me a list of possible questions for this. That was one of the questions.
Mm-hmm.
I have it in writing, so that was my answer. I already knew I was going to say that. It's not just because he said it right now.
Great mindsets alike.
So happiness is key, right? So why would I have $1 billion and be sad and be
Yeah.
unhealthy because I'm so stressed out about money that I cannot make good decisions for my
Mm-hmm.
own health? And if I'm not healthy, I'm not happy. If I'm not happy, I'm not going to be good for the world. I'd rather be poor, right? Even homeless, right? And be
Mm-hmm.
happy than be a billionaire and be unhappy. So
Yeah.
money again is a good servant, a terrible master, right? Don't
Mm-hmm.
just work, work, work to make money. Be balanced. Things that I would have changed on my career, right? When I was younger, now looking at it, is I should spend more time with my family when my kids were younger. I did spend some time with them. I included them on my business, right? And I spent some more time with them. But looking back on the time now for you guys that have young kids, is spend more money, spend not more money, spend more time,
Mm-hmm.
spend more time with your kids. Once they reach 18, they're gone. And actually, that's why I make different decisions. When my youngest was my youngest is about to be 25 years old. The
Mm-hmm.
oldest is 33 years old. So there's an age difference. I
Yeah.
have four kids: 33, 31, 29, and then 25. So there's an age difference. When my the youngest kid, was about to graduate college, I made different decisions for that reason. I didn't want to miss out like I did for the three older kids. And I
Mm,
wanted to spend more time with them.
that's
Uh,
pretty awesome.
uh, Another thing that I would like to share with the world, right, is it's not all about the money. Yeah, I'm a CPA. Yeah, I'm not traditional CPA. I think outside of the box, but I'm also a published poet, right? So other than I published for the finance world, but I've also published poetry,
I love that. That's awesome.
right? So I like to write poems. I've been published since I was a teenager. I One of my first loves. I wanted to be a musician when I was younger, so I
Mm,
play a few instruments, and I wrote a few songs. But I mostly now just write poetry. So that one people wouldn't think, hey, an
yeah.
accountant. Yeah, but I'm also a poet. So if you guys are into a poetry brews, poetry writing, send me a link. I like to join you.
That's amazing. So you're also creative and analytical. It's hard to find the kind of people in the world. It's probably why you're such creative inside of the CPA world. You have
Probably.
mindsets.
Yep. Yep. I
Awesome.
that's probably why I think outside of the box because I am creative. Yeah, you're right. I never thought of it that way, but you're right.
Case Study loves it too. Also, again, her other book he has also showcases about happiness. A gift from the heart, ultimate guide for charitable and legacy planning by Rick, plus other poem books he has as well. Just make sure that you go find Rick online. You can see his books, you can see his accounts, his websites, and again, he's offering you guys a crazy deal right now. His whole program that's normally $5,000 for only $4,500. And again, if that saves you 10K, you just doubled your money right there.
Yep, and it's only available for the first 10 people that sign up for it. So yeah, if you want to take advantage of it, please make sure to do it as soon as possible. Otherwise, after we do the first 10, it'll be the regular price.
Awesome. So guys, don't wait. It will not last long. You can already tell how much value we can add to this call alone. And I won't give the price for his hour-long conversations, but it's not cheap. So you be on this call right now with a huge value add that'll cost you lots of money normally. So again, make sure you call Rick as fast as possible. And before we hop off, Rick, any last thing you want to add before we conclude for the day?
Well, I enjoyed being with you, Jordan. I've enjoyed meeting you, learning about your family, what you do. Enjoyed about this podcast. You guys, I hope that you've enjoyed the conversation today and that you've been able to learn at least one thing that you didn't know about taxes that can help you, that you learn at least one thing about your life, personal life that you should be, and I hope that you're happy.
I have more than one. This has been a super fun conversation. I meet people every single week. It's been by far my favorite conversation I've had so far. So, Rick, thanks for being
Thank you.
here. Those watching now, Elite Edge Podcast, we go live every single Monday and Friday, bringing you the best of the best around the world to help you upgrade your life for finances, real estate, business. List goes on. Well, top players come become elite, world-class people. Rick, thanks for being here. Have the best day yet.
Thank you. Have a great rest of the day.